Okay, so before we get into the MAG7 setup and the actual hard rules that are in place here, and it's advisable that we don't really bend them or modify them as much as we can. These have been tested across different financial products, uh, instruments, financial instruments out there, and so it works. It works as it should. It's just that we need to understand what it is. So it's a noise filter first because as you know, a lot of the indicators suffer and they cannot really navigate tight ranges, and you get chopped up a lot of times. So yesterday, for example, somewhere around here. Now this looks nice on a 1 hour chart, but if you go to a 5 minute, it's a total mess. And I actually got chewed up and spat out somewhere along the lines over here. I was long, then it went down, then you know the story, and then in the end you say, okay, I was right, but perhaps I called it a bit too early. So last few days, I was basically sitting here and calculating every move, trying to recover the account. So I did manage to recover one of them, and just now on this move, I was able to break even like $13, but I was minus 9K down, so it was quite significant for me. Um, and that's because I got myself into a chop zone. Now we're going to look at MAG7 specifically here, but first and foremost, okay, turn all this crap, everything, turn it off, all right? And we need to understand where we are in terms of the market structure. We're in a downtrend right now, and the downtrend is defined as you have your. There's a lot of drawings in here. Okay, let's change it to maybe Bitfinex. Should be a little easier on the eyes. Okay, so here we have a clean chart, nothing on it. And there are a couple of rules that we need to look at in terms of what's going on. So downtrend, you guys already know. You don't know that you're in a downtrend here. You don't know that you're in a downtrend here. Hell, you don't even know you're in a downtrend here when there's a reversal. So we need to understand and think in probabilities in terms of what is it that we're looking for. And right now, before we talk about MAG7, we're going to talk about ATR, the average true range of each one of these candles. Now consider this zone, and this zone over here. These are absolute death pits. You have to be really, really good to survive here. And let me start with a little quote by Charles Munger, right hand man of Warren Buffett, and he said that to live a happy life, right, you basically need one thing, which is lower your expectations. You must not have any expectations. If you go through life without expectations, just focus on what's right in front of you, that is a good way to build consistency. Okay, so expectations F it up for a lot of us. Unrealistic expectations. This is how products, courses, and all kinds of things out there are sold to us on the basis of expectations and exceeding those expectations. So we have to realistically start with a naked chart and say, look, I'm looking at a freaking market that likes to move. It's a volatile market, but there lies an opportunity. So my job is not to get caught in any situation where I won't be able to get out of my trade if I take one. So having said that, first we understand that we're trading a market. We're not looking at a shortcut. We're not looking at. We're looking at one hell of a helper tool, but that's just that. It's not some magic answer to all the questions that the markets throw at us. Technical analysis requires time, and you do enough of it is how you basically learn to the art of survivability. So you learn how to remain part of the market and not give up and not get completely wrecked. So before we open any of the tools, it doesn't matter what it is. I don't care how good your algorithm is. I'm not going to praise and say MarketSpy is the best that there is right now for retail, and we'll explore right this moment. We'll talk about why, and compare it to other, for example, indicators in terms of using normal things like divergences. You know, there are a couple of secrets that lie here in the chart. All right, I want you guys to really pay attention to this, because this was something that I learned at work, and I don't see a lot of people talking about this. So price, right? Doesn't matter where it is. It's a reflection of mood, right? People's mood. So let's just start with, now a lot of you use, I don't use this, but you do, a fib retracement tool, for example, and you do something like this. You go to from the peak, all right, to the valley over here. You go down and you measure your fib levels. And yesterday we were sitting at this 0.382 Fibonacci level right here, and this is where I got murdered. All right, this is where I lost money. I won some, and I continued to trade. All right, so I took a little bit of profit here, and I thought that we might actually post a little handle here. And since this was a flag for me, this was a little flag. There was a candle that was kind of started to peek out, and I said, you know, this looks like a potential breakout, because this pattern just appeals to me. It just looks like we had a sell-off. Okay, we had a consolidation here. We made a move up, and I think maybe we'll have a continuation, one more to this level. So I thought to the 53K Bitcoin level. All right, that was my thing. So using this tool, obviously, technical analysis involves a variety of tools, not just MarketSpy, but you can use the standard helper tools like some of our traders here, 8Bear and others have done so over the years. They've been using other applications to help them figure out and what the market was all about, depending on what time of the day they were looking at it. So the interesting part is that you can draw it from here to here as in a downtrend, and you can also say, well, if this is an extension and I think it's going, let me from the bottom to the top to see where I might actually end up. You will see instantly that the 38.2 sorry 0.382 level here, right, was right at 50K. And 50K is kind of like, we bounced above it, we're hugging it, and I'm like, you know, it's holding us, it's supporting us with a flag. And now, mind you, at this point, I'm not looking at anything. I'm not looking at MarketSpy. I'm not looking at momentum, nothing. I'm just trying to understand what is happening here. And I'll tell you how I failed and how you can learn from this. And so I thought that we're going to have a breakout. And when that thought occurred to me, you see what happened is that I wanted to see that. And so when I turned on my MarketSpy Armageddon, my mind instantly started to search for a confirmation. So instead of looking at what the system was telling me, I started looking for something that that wasn't there, but I wanted to pretend that it was and wanted to force it. Now, inside of this tool, there's an excellent little quote here, an Easter egg. If you scroll down a little bit, you will see that there's a little reminder in here somewhere. There it is, random reminder. It does nothing. It's just there. Okay, Easter egg, and it says don't force the trade if it isn't there. This is something that I have struggled with before, and many traders to this day they struggle with. And they simply force a trade because you've been away, you've been doing something, and then just everybody's making money, and then you think you can jump at any one of these points and make money, which is not really true, and I'll explain why. And after we understand this, we can start going over the MAG7 strategy and how to apply it on top of our general market understanding here. So 50K level, right, is right here. 0.382 fib from the top to the bottom, a significant level. And from the bottom to the top, it happens to be the 0.618 Fibonacci level. And so guess what? how many algorithms and traders are looking at the exact set of data here, trying to understand if we're going up or down? So you get a chop zone. You get a chop zone where people are really freaking out and they're afraid to miss. So every dip gets bought and every rise gets smacked down. And so we kind of play through this, and it's extremely difficult to hold here. Let alone, so if you're, we talked about different types of traders. Now, if you want to play swings, remember, if you didn't get in on here, forget about entering here, 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 anywhere. If you did not short here, or on the retest here, or if you were not able to get on this wick, or if you didn't, there is no swing position for you. So that strategy is off the table. You're not looking to hold. Swinging means you're getting in and you're holding intraday for at least 4 to 8 hours. And you have a very hard stop in there that will take you out in case you're wrong. Now here you would have been wrong 1,100 times like I was. And that's natural. You know, it happens. The market sometimes hands it over to us. It's understandable. There's no problem. But this level was very algorithm and human behavior driven, and this is why we had this up down up down up down. And on top of that, one of our traders just mentioned there in the chat, I saw, make sure you have your support and resistance levels. And so this range here, usually a level is not a single line, but it's usually a zone. So this is why sometimes we go ahead and we draw these zones and we say, well, this is where we might get a rejection. This is also how the premise of market enemy works, is to be able to find these ranges where there was a decent trading activity happening there somewhere in the past. And when we revisit it, market has memory. It will bulls will attempt to defend it, and bears will attempt to pierce it and push the price lower. So there's this constant battle going on. So okay, so you have this resistance here, right? But Bitcoin, we know, has this tendency to sometimes, like for example, this right here could easily rip through this, and we look back and we're like, what resistance? There was no resistance. So these kind of flashbacks, when you look back and you're actually in action, you're thinking, okay, maybe we'll just run it because hell, so many people are probably like trying to short here, so maybe we'll just run it a little higher. Might as well just go long. I have a pole, I have a flag support, cool. Now, what sucks here is that when this broke down, right, my stop loss was here, and on the flag, it was quite a distance away, so it took a nice little bite out of my position. I actually sized up on it here a little bit too aggressively. So what happened was only natural that I would lose a significant chunk of my equity, and then I'd have to grind for the next 2, 3, 4, 5 days to break even and top it up a little bit. With maybe a small profitable trade, not going too crazy. It happens once in a while, and this was here. But these are the kind of things that you need to have in place in order to understand what is happening. And my logic was, if we're like bouncing on it on this level, it is likely that we have already conquered it. And I was zoomed in and stuck on a lower time frame. You guys trade 5 minutes sometimes, which is even harder to make out. But on an hourly chart, this looked like, admit it. There's a support here, and I was like, okay, this bounce is it. 1, 2, 3. Now we have here what's called true resistance, that is defined by at least 3 touches of the lower floor of the resistance or support. So 1, 2, 3, it is likely that we get rejected. Now you have to understand that these 1, 2, 3 touches could be considered 1 on a higher time frame. This could be considered 2 on a higher time frame, and this is the 3rd on a higher time frame. So you can't really judge based on this that this is a resistance here for sure, and now we're going to go down. But even if that was the case, we came back up, and if I had held it a little bit, I would have gotten out in peace over here, so without any worries. Unfortunately, that didn't happen. The stop loss. Now, the stop losses, this is also the reason why I personally very rarely use stop losses because my exits are timed and I don't really hold if I'm not here and I'm somewhere around here. I know danger is through the roof and I need to be able to get in. You can't even see it. Get in and get out literally somewhere in there. It's so microscopic you can't even see it. It's usually 50, 80, 200. I don't know. So if I get in here and it starts like pumping, I get my 90 percent exit somewhere over here. If it just gets in the chop zone and it goes up, down, and as soon as it goes underwater, I know something's wrong. Now, theoretically, what people will tell you is that all you have to do is get in and hold. Now, holding through this, the longer you hold, the more you risk. Because if this would have continued falling, then you're done for. You know, you're wiped. So what do? This is where MAG7 comes in, right? So first of all, once we know this, if you are lucky to have been able to identify an area like this, 0.382, 0.618, and you're like, damn, this is actually quite a significant level. No wonder why people are screwing around here. Okay, let's get rid of that. Now that we know that there's resistance, and that is if you sort of sat down and did your technical analysis without anything, you just kind of identify a logical support resistance, and you're like, yeah, this is happening. Okay. Now you can actually add tools to actually help you navigate the waters inside of these ranges and candles and see what's going on there, and drop down to maybe a 15 time frame and lower so you can scalp along. And this is what it actually means. So you're constantly looking at the ATR value and the distance that's price already made. So consider that consider this uptrend here, right? Let's turn on the Armageddon and just look at the average size of all of these candles in this consolidation and uptrend, and tell me, what do you see? So right after this consolidation here, we come down, we start pumping, right? We go up, and the number one thing you're always looking at, is how far away are you from the magnetic ribbon over here. Technically, it always pulls price back towards it. So if price deviates too far away from it, like for example over here, you will see these gaps. Price just jumps and EMA just can't keep up. So it's over here again. You can expect a little dip, a little squat, a little sit down here where the price just squats a little bit, and then right away impulses away from it. Now these areas, right, this is one of the equilibrium zones, very early greed driven equilibrium zones where traders are just like happy to buy any opportunity, but the minimum that they will allow is the 5 period EMA on any one of these time frames. It's important to understand that if you're working with a 15-minute time frame, working as in it's your trigger sort of entry time frame, which means it's also your exit time frame, which means your candles and moves are smaller. Now take this candle, is 159. If price goes half a distance of this value, you should probably be out on a quarter of this distance. The reason I'm saying this is, well, okay, what this means is that if you got in here, right, and it pumped, and suddenly the next candle open just goes higher and higher, you can take profit easily, or you can hold and move your stop above your entry. But otherwise, if you're inside of a range here, like consider if you're here and any one of these candles, that's pretty scary, because we don't really know what's going on, but we actually do. If you look at MSX here, you would know what's going on. But let's pretend that we don't, and all we have is a simple moving average here, and it's split 5 and 2, and in between 5 and 2 it's a favorable area for buyers to get into and participate in this price action here. And what that means is that price will always pull back to at least so in order of of sequence here. Number 1 is blue. Number 2 is our EQ zone 1. Number 3 is EQ zone 2. And number 4 is EQ zone 3. Does that make sense? So what does that mean? That actually means that you cannot enter here. You cannot enter here. You can only enter when price actually dips and touches any one of these areas in the EMA. Supported by momentum, then you can understand, how do I scale into it? Is it a single order? If it's a single order, you have to understand, from here, your trigger is always the baseline reclaim. From the baseline, how many candles do you see posted here? And we see quite a few of them. And we have 2 impulsive candles here, which, you know, can exhaust price, right? Nothing goes up forever. So if each one of these candles is an average size of 159, yet again, we can see that example here. We looked at one here. So we know a range, okay, when you're inside of a range, where it's no longer pumping and goes into a range, you know that, okay, about 150 or so, that's an average of how much it's going to move. Now you need to account for the fact that you will not have absolute entries here and exits here, which means you're getting somewhere right in the middle, and this is where the half candle theory comes in. If you got in the middle of this candle, right, your next target is basically the size half of the candle you got in. How to better illustrate this? So all right, let's find something choppy. Let's find something extremely freaking ghoulish over here. So this over here, right? You see all these candles. Let's turn them off. And if you can measure one candle, you can see that the next candle goes at least half the size of that candle. And then goes up. And the next candle goes half the size of that candle. And then this candle fakes out, goes back down. It drops down to this level, half the size of this range, okay, from here to here. Look at the cross. Do you see the cross over here? It's the middle, right, of this low and this high over here, this little zone. And we have this. So chances are when you're entering, you're always getting in somewhere in here, and it's never the low or never the high. So that means if this candle moves by at least 150, 160 on average, you must be getting out about $20 later. Like in and out, in and out. If you're scalping, you must be getting out $20 later. You cannot be holding this, hoping that it will go up, or if you're short, it's going to go down. If you're short here on this orange line, your exit must be planned 90%. Like this is 150, that's already exceeding it. So your exit is like boom, 73, and you can repeat this process again and again and again until you're out of the range. Now, there are different things that we need to pay attention to. Oh, and look, half of these candles chopping through the line is actually support. There's the damn support here. 1, 2, and 3, and it keeps falling, 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 comes back. And look at this. Why do we have these impulses from here down to here? Look where the cross line is. It's in the middle of this range. So if you ever see an impulsive candle like this for no reason that looks extremely different, it's the black sheep candle. It looks different from all the other family of candles. It looks like it's a spiller. The spill of a candle can be bought if it reaches, you estimate, you're like saying, okay, maybe the middle of these candles. It's easy now. I wish we could just like forward test it somehow, back test it. But what I'm trying to tell you is that when you have a spill like this, you can expect at least half of this candle. And so if your entry was here, your exit would be half of this candle. And the next exit, probably half of the range that was created by a few candles, a group of candles, right in the middle. And we continue. So this is called a range. All right. Crypto Ranger is explaining it to you clearly. So that you must understand what it means for you and your entries. So if you're not getting in here or selling here, and you will know when you do, because you'll be instantly put in profit. You'll be instantly in the green if you had a good entry, and that will allow you to hold it. If not, if you got in, it's like, get out. $5, $10, I don't care. Whatever you can, get out. But what are you saying? Whenever I can. What was this, arbitrary? Well, this is why we have the magnetic ribbon on Armageddon as the first sign of resistance. You see, the 5 EMA, nobody will tell you about, is actually an average of half of the ATR of all of these candles. Okay, so what the hell does that actually mean? Well, it means that if you look at the EMA there, it tends to sit somewhere in the middle. So it's not at the top of the candles. It measures the close of each one of these. And if one candle closes here, the next candle will close here, EMA will be 5, split somewhere in between there. So this is why when you have an impulse like this, don't chase it. Wait for it to go and tap the EMA, the 5 and the 10 moving averages here as your short-term equilibrium zone that you can participate in for that last one more spike up. This will happen on the downtrends as well. If you flip the chart, price goes up aggressively. Look, do you see that window? Look how far away the price is and where the EMA is. It can't keep up. So it pulls price towards it just as aggressively. And what does it pull it to? From this low, you just visually go back, find the lows and be like, okay, this was the range. This was the high. It is going to half, ta-da, right here, half of that range. If it's small candles, at least they're going to chop. So how is this useful? It's useful if you got in here and did not exit here, and then you're underwater. Expect this candle to come back one more time for you to exit where you entered. You only make money on fees that way, but you also don't risk staying in the market for too long. Okay? And so when you're micromanaging is not good, but if you understand what's happening here, you can easily get in and out. But you can't repeat the process. You can't go in and out thinking that you found a way to milk the range, because one of these candles will not come back and we break out of the range. How do we identify that? It is important that we understand basic geometry when it comes to markets, and that is our squeeze patterns. Okay, so let's jump to the squeeze patterns real quick. Get rid of all this. A squeeze pattern, what is it? The requirements is that in a tight consolidation range, your horizontal lines are the best, no doubt about it. But also when you're drawing a squeeze pattern, you need to find at least 1, 2, and 3 peaks right over here. Now you'll see like, oh, a fake out. Yes, it is. And then you have 1, 2, and maybe 3 over here. So you draw it however you like. All right, or maybe sometimes it's like this. It doesn't really matter. You need to have, now look, there's no touch here. Now in traditional trading, people will tell you that you need to have these very perfect sort of touches, right? So it has to touch here, it has to touch here, it has to touch here to confirm, and it has to look absolutely beautiful like this. But the truth is, sometimes you will not get this. But let's say you're somewhere right here, right? And you don't have any pattern to go by. Now, you start drawing a pattern when we had a range, and it's kind of visual because range will have same size candles, and then one huge candle. Volatility is expressed in candles that are just outliers. They stand out. So a volatility expansion event draws itself on the chart by posting candles that look out of whack. And this is how you know that, okay, there was a range here, maybe. We fell out, retested it again, right? There's some resistance there. And like this stuff starts, okay? So you know that this has already played out. And if you're not here, the risk is super high here. It's already moved. So what are you really looking at, and how can you play this setup next? How can you actually identify what's here? Well, you don't. You actually start from the low, okay? And if price moved, you need the second low. So you don't draw a line like this, not yet. you need to find a low, all right, a higher low, and you'll need to print that higher low. So this is your first point, and then let's build it up a little bit, and this is why it's important to wait for price to build up. So okay, this is happening now. Whoa, sorry about that. So we have this happening, and you might be tempted to go and draw this, all right, and which is fine, but you're still not trading, because you understand that it has to build itself up. There has to be some pattern to tell you that it can't just go down and continue up. It's not like what they show you in books. So if this was not it and we have a new one, you will go and move this to here. And I recommend you don't actually trade this, because it's building up something that will have a better R than you messing about in this scam range, is what they're called. They scam a lot of people. They show you like, oh look, breakout, no. Oh, breakdown. Is it a breakdown? Is it a breakdown? Oh, is it? Oh, it's not. Okay, so you move this here. Now here is an interesting thing. You have a couple of candles that are starting to look a little bit more volatile and a little different than this range over here. So what does that mean? That's what it means. It moves, because when volatility increases, that means there's interest and there's fighting going on, and it's likely these small little peaks above the actual transition line here is not it. All right, so you can adjust it later however you like, but as it develops, right, you want to be staying out of this range, and no MAG7 except the pyramids. No anything else is going to help you here, but MAG7 will show you how this is a noisy area. And I imagine that today one of our traders, Kevin, got caught up in one of these, I think, because the holding period here is not identified, and a lot of traders unfortunately don't know this, but it's just so much work to finally see something, get in, and then be out like less than 5 minutes later. Where's the fun in that? I want to get in here and I want to exit like on the moon through a tunnel. So the majority, I would say 89% of this lifetime of price lifetime, it will spend ranging. You will not get these explosive moves every single candle. So if one is in the vicinity already, you're not getting another one anytime soon. Because as soon as it happens, boom, stop, consolidation. Unless it's a, and the thing is, you can argue, you say, well, CR, what if it just continues like the bull run we had, right? Well, that's the bull run, but even then, you simply don't know if it's going to end or not. So your exit and your timing and your measurement, your logic to enter here and exit like half of the ATR of the candle is always there. But we have strategies where you get out, but you leave a little bit of something to let it run, and that could end up landing on one of those huge impulsive candles that just keep, like Elon Musk candle, right? It just keeps going and going and going and going, and that triggers FOMO. But you don't have to have FOMO, because you already have a little guy running there. And that's the reality of it. So coming back to what Charlie Munger said about living a happy life, if your expectations are high, you will be miserable for the rest of your life. This is where the majority of our problems as traders come from. Expectations. And that's not to say there aren't good systems that can help you along the way, because there are, and MarketSpy is one of them. And I'll show you how we can use it to our advantage, but it will be very frustrating if you want to see the results that you want to see and not the gifts that the markets give us. And what they give us is, the majority of the time, unfortunately, due to our timing, it's a good idea to not trade a few days and then see when price moves, what hour, and record it for 1 week straight, so that you know your local time. when does Bitcoin, so usually what happens is that there's a certain time where it will start going down from a particular time all the time. It'll start going, for me, it's Tokyo, Seoul time, and that's +9 UTC. What will happen is that at around 6 to 8 p.m., price will consolidate and will start dumping aggressively, only to pause and instantly reverse very aggressively to the upside. So I was able to share a lot of the setups based on that timing, because I'm like, okay, guys. And unfortunately, that means for you guys, it's very early morning if you're stateside. And yeah, so we end up missing the moves. Likewise, when I go to bed and I come back and I see you guys are chatting there in the platoon, and it's like Bitcoin made some moves, and I'm like, I'm just waking up to a consolidation. And of course, I feel like, damn, you know, like, what am I supposed to do now? And unfortunately, I'm gonna trade peanuts. I'm gonna trade these $20 up and down moves and hope that I don't get wrecked inside of a range, because you can get chopped up, especially if it moves extremely slowly, and you're like, when is that big spill coming? I don't know. So yeah, that will happen. But rule number 2. So number 1 is that you have your squeeze patterns, you understand the time, and most importantly, you understand what is happening inside of a range. The 5 EMA in the magnetic ribbon on Armageddon is where the price wants to be. So if it deviates from it inside of a range, next few candles it'll be right back to where it started, below your entry. And when you close it, it will go right back to where you were and higher above your entry, and you wish you would have held. This is what's happening here. It's what's happening here. It's what's been happening here. Now let's go to where we are right now and bring up some other examples to try to understand what's going on here. Right now, it looks majestic. It looks so clean. But when we were in here, I was like, what the hell is going on? Are we going down or are we going up? Is this baseline reclaim, or are we going to continue? And it crapped out over here and continued falling lower, lost it, then reclaimed it again. So obviously there's trauma here now. Good setup, too early, but you don't trust this setup now because this setup failed. You see the dilemma. Welcome to trading. Markets play around like this, and we need to find a way how not to expect things that are not realistic. But what we can expect are some consistent setups with the system, and we have talked about how. And extreme volatility here. Look at these X's. They rarely show up like this, but this just tells you like things are going nuts. And remember, when you exceed the number of these X's, like I don't care what time frame it is, and there's a reversal coming. There's a reversal coming. The only thing is how fast. So today I spent, let's go to the hourly, about 8 hours here. 1, 2, 3, 4, 5, 6, 7, 8. So somewhere right in the middle of here, I would bet that this was your area of trading too. First, candle pump, confirmation, you're like, it's going higher. You got in. It goes up, stays, doesn't do anything. Goes down, you close the trade. It wicks up. You're like, damn, I was right. You go up long again because it's so close, and you're like, you know, there's momentum, there's a bounce. I'm just talking about general psychology, right? And you think, okay, it's going higher. You start checking other time frames. You go to 4 hours and you say, we can post a double bottom here, and there's a divergence. And there could be a green C dot, which will push us higher. Cool. When will that happen? I don't know, but I think we're going up. And we're going up to at least 51 maybe to retest the previous resistance here. Okay. It's synchronized. So you are literally, this range here is literally like this one candle is where your troubles, where your hundreds of entries and exits are. Billions of dollars are exchanged inside of this one candle on a 4-hour candle, and it's all inside of this range. Now look at the wicks over here. Look at the wicks over here and the median where it comes back to. Comes back to what? It comes back to exactly this level that is basically a nothing level. So if you go long here, because it's like, wow, pump, flag, maybe pump up to here, sure, go long. It sits down, does nothing, opens, goes a little bit higher, gives you hope, comes back down. You close the trade. Then it instantly reverses, goes back up, you go long again. Your entry based on basically across the whole spectrum of the markets and traders and participants, they will always have these entries either at the top or the bottom. But how do we get in at the bottom and defeat greed and sell quickly at the top? Is that even possible? Unfortunately not. But what is possible is that you get in and price moves in your favor and momentum shows you a little bit of support, you get out. Most of your contracts out. Small size, big size, doesn't matter. Out, and then you can just manage whatever's remaining while planning for the next setup. So you have a pattern here. You have a set of patterns. So you drop down to 5 and you're faced with this horror. Now this is, remember, it's just one candle. It is literally just one candle here. This inside here. It looks clean, right? But on the 5-minute, not so much. All right, so let's take a look. And imagine having this level over here and looking at it. Now, in the platoon, while I was in here, well, we should probably open a trade here and I'll show you how. I was in profit. I was up by 1K. Then I got stopped out. I lost 1K. Then I tried to go long again. It started moving up. Gave me about 400. Then it went back down, literally on the next candle. And all of this was happening because I was inside of this range. Now, if you zoom in on a 5, look at that. See that? There are rules. Below baseline, no support here. At the same time, I'm thinking, is this a shoulder, head and shoulder inverse? If it's inverse, we're going much, much higher. And so I got caught up in here, all right, in the weeds. And look at the candles. Red, white, red, white, red, white, red, white. You call this Elliott wave simulation? What kind of nastiness is this? Well, the market is God. It does whatever it wants. All right. It will disfigure you if it pleases, and there's nothing you can do about it. But there were a couple of setups here, like MAG7s. And my rule is for the day, if I was able to come out and break even and earn at least $1 on top of all the risks that I took, then screw it. You know, I'm not about to stay. So I signed off and I said, you know, I'm out. And if it goes up, I'll probably short it. And as soon as I said that and I logged off and turned off, I got an alert. Ding, ding, MAG7 setup. And here we were, the beautiful blue dot. And I thought to myself, now, after this, you're telling me now. So how do you actually trade this? Well, the truth is you shouldn't be like me and trade this just because you missed the move here in the morning and you slept through it, or you came back late. Because this is what this little pause here is what totally screws with your head. So as you can see, the holding period for you should be, if you're in on a candle on a 5-minute chart, and if each one of these candles is about, again, it's about 115. Actually, we can look over here, 274, and on average, you know, cut this by 2, make it 130. So you must be out on the next candle at about 30. Now, what happens if you get in and you're like, nah, screw the rules and getting out so early and leaving so much money on the table because I can hit the jackpot here. Like I'm really sure. Like look at this. This is a nice uptrend, reclaimed, and my momentum there is probably telling me that my RSI. Look how thick it is. We're just getting started, and then bam, a little pause here. That's it. You're mentally you're thinking, yeah, but we're in a downtrend. This is a continuation. And what you do is you go over here and you start drawing a trend line. You connect these two. Now I'm getting at something here. Just bear with me. No pun intended. Bear with me. So you connect these two and you're thinking, okay, goes up here, I'll short it. Great idea. No, seriously. Probably a good idea. Goes up, you short it, you're suddenly in profit. Now, your entry is right at this line that you drew. And you're thinking, okay, momentum is going to snap back. Let's take a look at what's going on Delta. Do you see how messed up Delta is in this area? Do you see how it goes up, down, but doesn't really cross the zero and just creates another like, but then eventually goes down? All right, so this can happen. All right, markets are not efficient. This can happen. So you go short over here. And $277. And you remember CR said, if I go at least half a candle, I must get the hell out. So if my entry is here and I somehow managed it, I must be out at half of this candle. Or if I go underwater, I must exit at half of this range. From here to here, bam, in the middle. The next wave takes you out if you're patient enough to understand that this is going to occur. Not a continuation. Why not a continuation? Please remind me in a bit. I might forget. Why not? So, if you entered here on a 5-minute that has an ATR of 277 points. Now, you guys like to trade 5 minutes. And you like Charlie Munger, who says, tame your expectations if you want to have a happy life. Then you are certainly understanding now that this is a gift. And that if you can repeat the formula every day at least once, this is your one trade that gave you the full ATR, all right, directionally, that you were able to identify and trade. But if you did not exit, you will close your trade here. And this move from here to here is 4 times, 5 times the ATR. Think about that for a moment. But it's overextended. Why can't it continue? Why can't it continue just going up? So now that brings us to the next understanding about markets. We have, after a while, you will notice that we have these time spaces. 1L here, 1L here, 1L here, and 1 here, 1 here, and 1 here. These spaces control the velocity at which, according to the ATR, at which price will accelerate, and there are techniques to project how long a setup could take to develop. And so what happens is that you end up with these gaps, all right? So the pattern is this. 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 This is what the price does. And your entry is somewhere in between here. Because you're slow, you're not a machine. And so your exit has to be not at the bottom of the candles, which is impossible. You will never be at the bottom of the candles unless you're trading market enemy setup and jackrabbits and others. But your brain will not let you. And so these time spaces here, spaces of time, will tell you that, you know, it is likely that price will mirror that. So if we have this gap and we have this gap, you can't just have instantly like another gap like this, while this gap is bigger than this gap. Okay, so what I'm trying to hold on a second. Let me just like turn this off over here and show you what I mean by that. And this is just how to assess probabilities, right? And sometimes you can't get wrecked. I got wrecked inside of a range yesterday, anticipating some hotness that never happened. By the way, a potential MAG7 setup here that was never confirmed if you didn't have your stop loss done. We'll talk about MAG7 in a bit, but here you have your gap, and you will notice that these gaps are equal. You have your gap here, you have your gap here, gap here, and now when we're here, like, you can expect that you're going to have a gap here. And what's next? Well, if it's to continue, you can sort of understand that next price level is just about here, according to this gap. Now, is it possible for this gap to extend low like this? Only at the end of the trend when it's exhausted. And momentum will tell us, but this is not likely because we're now printing a symmetry here. And as a matter of fact, this can really extend and bring us up to here, 48.8, 48.9, based on this projection. So once you have these projections in place, this is where you actually start looking at the indicator. And the reason it's called MarketSpy is because it looks for things that are irregular. It spies on information that is not obvious, information that is not, it wasn't just an arbitrary name that, there's market cipher, market god. The market is the god. There is no market god. And there is no cipher. We decipher the market. That's what we're actually doing here. So through analysis. And spy is what's telling you, like, it whispers in your ear about, dude, there's something going on here. Check it out. There's a baseline reclaim. And I'm going to show you how this is going to play out. So bear with me. And if you know SPY, if you have studied it, all these sessions that we have done together, then it'll show you these little hints and signs, and it'll whisper to your ear and tell you what to do. Okay, now that we understand the holding period, if you got in at the top here on a potential, there's a little, look how far the price has moved from here to here. So your period cannot exceed the ATR of any one of these candles. You have to be able to get out and set it up in such a way that if you do end up holding, that it can run for a little while, and it has to be a small size, unfortunately. It cannot be a huge size. If you hold a huge size, you will end up closing huge in the thousands. It's happened to me. I had one hiccup yesterday, and that's because, yeah, it's I was out of whack. I was tired, and it's important to be breathing, to be healthy, to be basically, don't eat. If you eat, your brain is going to relax and start working on processing. You need to stay hungry when you're trading. I actually recommend that. And maybe a little bit of coffee or whatever your preference is. Maybe tea. I'm a tea myself guy, and I like tea. But anyways, yeah, hot chocolate, whatever it is something that to keep you going. A little bit of sugar maybe, but don't sit there with your stomach full and trade, because that's just gonna put you in a different zone. Okay, so now that we know what to look for and how we can better predict what is likely going to happen, and sometimes, when you're not seeing these things that we talked about just now, just stay out. It's not worth it, because it's just going to run you through a lot of stressful points, and it might actually undermine your performance tomorrow, because you'll have that memory of like, damn, and so you'll maybe attempt to, what they call it, like revenge trading, right? A lot of people do that, where they start to aggressively just getting in for no reason, because it's a feel thing now, because you got the feels. It's personal. Like literally some asshole on the other side took your money away from you. the market. It's personal now. You know, it's like you you literally walked into my house and took it straight out of my hands. You know, my money that I worked so hard for is gone. Are you crazy? I'm gonna get it back. So revenge trading, you know, that's those are the kind of things that can happen to you. But anyways, all too familiar with it. I'm sure everyone's that's part of school. But now MAG7. So MAG7 is a filter for noise in the markets, and I'll show you how it avoids areas where there is consolidation. Look over here. It doesn't matter that there's a momentum. MAG7 is very so to create a system where it can show you clean signals is extremely difficult. But I think we came very close with this model here. So in order of appearance, I want you to, number one element of MAG7 is to borrow it from Armageddon, and it will be the equivalent of this one little thing that's included here. Bear with me. On Armageddon, when you have a baseline reclaim, that is your first starting point, sort of like a clue telling you that a short-term change is coming, but we don't know how long it's going to last. We need some supporting evidence to see that this is the case. So when you have a baseline reclaim, there are two things that you need to know about this baseline reclaim. Let's say the baseline is running here and price is here. And this baseline is here, but let's assume that our baseline is here. And if we have a jump like this is not a valid baseline. It will not simply continue up. It will most likely dump back, and there will be some craziness going on like this. Okay, so you need to understand, the smaller the candle, the better the entry. The bigger the candle, the better the sell when it pumps up. The stronger the candle when it falls, the better the buy. So the smaller the candle, the better the entry inside of a range. But you must confirm where you are in relation to that baseline. So this is how it works, right? So basically, here you have an impulse, but understand, 1, 2, this is a 5-minute chart, still okay. 1, 2, okay. And we have a baseline reclaim. We don't have it here. When you see the green a little bit like this, it's not really, you're not seeing it. You don't have a candle closing above fully. It's visible. It's a standout candle. All right. You don't have it here. You don't have it anywhere. You have it here. Okay. You don't have it here. This is not a baseline reclaim. Give it some space if you're not sure, because there's a mechanism in here that can allow you to skip the FOMO. Baseline reclaim, pumped off the lows. Boo-hoo. I'm not going to chase it. What will happen is this. This. What is that? Well, this is like an extension for ultra volatile assets like Bitcoin. Maybe a smaller, quiet moving stock that is not as volatile. All it needs is the 5 to 10 EMA as its equilibrium zone to pick up a freshly minted interest here from buyers. Will be sitting right here. Right here. So when you have an impulsive candle, you sell into it. You get a tiny small candle inside of the equilibrium that looks uncertain. And remember, uncertainty, right? Fear and doubt. Do the opposite of the market. When it looks like, what if it most likely is not what you think it is, and it's going to do the opposite. When you have small, tiny candles inside the equilibrium zone, it's a buy, supported by MAG7. What is MAG7? Let's continue. Number 1 of the 7, the Magnificent 7. Number 1 is your baseline reclaim. Helps, but not necessary if you have a green stop button here that tells you ending this trend. Helps, but not necessary. So number 1, baseline reclaim. This baseline reclaim, pay attention carefully, is the same as short-term trend flow. Pay attention here when there was a small reclaim and then we fell. Here's the short-term. You know what? Let's do this. Go to inputs. Let's get rid of what are we looking at? Histogram to increase the visibility there. And let's get rid of the cloud. And instead of the cloud, let's highlight, because we only care about the cross. So you might as well have a setup where things are a little cleaner. And this is one way you can arrange to have a better view for yourself. And perhaps the RSI is a little extra, but we don't need it immediately. Good to have it. Okay, let's keep it. Let's keep it. It's a smooth RSI, so it's not as crazy as the one normal one. So okay, so you have your MarketSpy X momentum screener. Okay, MSX momentum screener. XX across multiple, a crossover of. So it's all in the name here. Everything is not there for nothing. So you have a baseline reclaim number one, and this baseline reclaim is it happens in tandem with your short-term trend flow. The short-term trend flow, as you can see, has crossed to the 0 line, 1 bar as a confirmation after the baseline reclaim. So baseline reclaim, 1 bar confirmed above 0 line. Look at this, baseline reclaim, 1 bar confirmed. Now this looks sketchy. This looks like but look, this pyramid here, the size of these candles, the fact that you're most likely entering at the top and your exit has to be slashed by 2, like this wick over here or whatever, $128. Like, are you kidding me? $160. You must be able to exit this and understand and recall what we're talking about here and say, yeah, this is the only way to survive the markets, because we will never know what the bottom and the top is. Once in a while, you will have little tricks like this, like baseline reclaim. You can put your order on the baseline. Boom! That's a good entry because it's instantly in profit. What can you do? Well, my friend, if you manage to get in on a wick or sell at the top, you can actually hold it past the middle candle and go to the other side of the trade, and bang, you have yourself a nice, rare, every once in a while kind of trades that are not going to come often, but you don't need to worry. You need to just wait. If it happens, it happens. Where on this chart do you see that this method fails, where we go up and then we rip right through it on the baseline reclaim? I'll tell you, you won't see it. There isn't, because this inefficiency works. And check this out. MAG7 is in play. So number one is baseline reclaim, aka short-term trend flow. Look, it goes down. What happens here? Baseline reclaim goes down. Short-term trend flow, we're losing the baseline. Does that make sense? Baseline reclaim, short-term trend flow going up. Baseline reclaim, short-term trend flow going down. Do you see it now? Do you see the R? It's right there. See your R, guys. Now, that's one element. Number two, nobody talks about the alignment of these C bars. They're called confirmation bars for a reason. And the reason they're called confirmation bars is because when they sort of line up and start trailing together like this, and they keep the squares solid, this shows you that there's consistency in the trend. When you have something like this flashing, all right, this baseline reclaim, long-term trend flow down, short-term trend flow down, VVS, bright blue bright yellow. You want to see a transition from blue. To smooth this out, turn on Heiken Ashi. Oh yes, we're allowed to trade Heiken Ashi because look what happens to VVS. Look how beautiful it becomes and smooth throughout. It's not choppy anymore, and your entries are so much, well, not entries, but a continuation visualization enhancement algorithm is at play here. So you can see how strong and vivid the yellows are. They just continue. You get this nice fat X here, push it down, and then boom, a dot. You probably have to exit, or you can't just hold from here to here. That's what YouTubers will show you. This is what people, when they get lucky, they wait up to here, they go live, and when they're here, they're closing it in front. They're saying, oh, I'm done. I went in long from here, but I didn't show you how, because it was trial and error, trial and error, trial and error. Boom, it worked. Time to go and advertise it. Believe me when I say you need to understand ATR. Next thing, your MAG7 setup is here and here. Bars alignment, perfect. Bars show up over here. That's a warning. And there's no supporting evidence that lower bars are there. Boom, they show up here. As you can see, there's noise. Like, let's go over here. Look. There's yellow, and then there's like faded yellow, there's blue, there's faded, 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 no strength. Boom, you have a MAG7 set up here. Now let's mark it on Heiken Ashi candles, and I'll tell you why not to use Heiken Ashi. But here's your signal, right here. It seems as though everything is aligned, except it's not. Not necessarily. And why not? First of all, exceptions can be made on a 5-minute time frame, such as baseline. So in your mind, always think about the higher time frame. If 5 minutes been trending up, so has the 15-minute. If the 5 minutes baseline is here, the 15-minute baseline is here. So when this happens right here, when price dips below the baseline into equilibrium zone 2 and actually closes below it, which seems bearish, it's actually dipping on a higher time frame because it's been an established trend a little bit. It's dipping into a 15-minute equilibrium zone or baseline retest like this merely, and it's going to reverse. And compared to all of these candles, this one is an outlier. It looks freakish. It's red, it's big, and it's not friendly. It doesn't look like something you would want to buy. But this is exactly what we buy. This is how Warren Buffett became rich, because he was buying something that was undervalued. Now, Bitcoin is Bitcoin and it's great, but price action is also like these candles, you're getting a deal. Here, these small candles, you're not getting a deal. Right? These quiet little, boom, you get a nice little whale candle over here. So, what am I saying? I'm saying that when you're focusing on a lower time frame, there's no problem trading 1 minute, to be honest. There's no problem trading the 5. But you have to understand that when it looks scary, with MarketSpy only, mind you, not I don't know about any other system, but if it looks scary on 5, it's probably still okay on 15. If it looks scary on 15, it's probably only just dipping into the buyer zone on 2-hour or 4-hour chart. So by the time it looks like, it's dumping, right? On a 1 hour and 4 hours, it's probably a good buy. So before that happens, everything in MarketSpy happens early, using a clever way to utilize lag to actually prepare you so you can trade, because we trade based on these confirmation signals, like on baseline reclaim. When the diamond disappears, your entry is here. Best entry, no diamond entry. Diamond, that's your core trade. That's your management. It's running. It's running. Nothing is definitive. Diamond disappears, entry. It's not like it's an opening to fall for the candle. Now for shorts is the same. You'll have to flip your chart around to see what I'm talking about, but it's the same. You just have to get your mind straight about it. Interestingly, this candle is a good buy. This wick is not, according to the diamond. The diamond knows best. The diamond is a deviation of exactly 1 ATR away of price from the baseline. So when the diamond disappears, it tells you price has gone too far away, like this one, from the baseline, so you're going to have a shit entry. The kind of shit entry that CR was just talking about when you're getting at the top or the bottom, but not in the middle. Middle is a horrible entry as is, but if you know how to exit, it doesn't become a problem. It becomes merely an understanding that you have to. Who the hell is going to give you free money like this? The market let you in, gave you a profitable candle, yet you want 5 of those candles. I'm not saying you, any of you in particular, but traders in general. So, number 1, baseline reclaim. Why is this not a good setup? Why is this a good setup here and this is not, even though we have a continuation? Why would you want to skip this but yet trade this? Or trade this but be very careful and lower your size a little bit. Your risk, you know, your exposure in the market cannot be that of BitBoy or CryptoFace who gamble away millions of contracts. Not Satoshis, but full Bitcoins on losses and wins. Why cannot it be this way here? Well, it's very simple. The rule states that after an extensive sell-off, we need to develop a long-term trend flow. Long-term means an elongated, Elon Musk style trend flow that at the end of the journey, at the end of the tunnel, turns white. There's a light at the end of the tunnel. Now you have your bars lining up a little bit too far. I don't know, not too good. It's better if they're like closer. If there's like one square and then the next square, third square, like they all, this is a little bit lagging, and it shows on VVS. It's like blue, not blue, blue, not. It's not a solid continuous blue like it was here. So what does this mean? This means that GPS. So number 1, baseline reclaim. Number 2, your confirmation bars align. Number 3, you need to have a momentum oversold condition, oversold wave, or overbought at the top, depending, that has a GPS at the bottom for long, and a potential divergence or a flag at the top. We'll talk about that in a bit for a short setup. But you need to have that, and things just align. Short-term trend flow, aka the baseline. Long-term trend flow, a greater moving average, somewhere in here. You know, when we cross the 0 line, there's something interesting happens when we cross the 0 line. It tends to boost price a little bit, but it could be on lower time frames coming to an end. So just because you see this on lower time frames doesn't guarantee that it will continue. Now, if you see it on 1 hour, 2 hours, you know, it might take time to cross that 0 line, so you can expect a little push to the upside. So 1, 2, 3, baseline, short-term trend flow. When I see these kind of slumps, right? Price goes up, cracks a little bit, goes up. Sometimes it's just green, like this. You ever notice that? It's just green. So it's kind of like a video game. As it passes these stages in the uptrend and it continues, it will continue to stay green. And as soon as you have these moments of red where it just goes red a little bit, doesn't mean it's a sell-off. Remember, on 15, it's still just starting green. On 15 minute, it's okay. So you can go back on 15 and check it out and see how it looks there. But this tells me that there are inconsistencies. And so if my MAG7, this one, is not setting up where the trend flow is down and then starts to show me white and go up, right? I'm not interested in these setups, even though you know, you look back and you're like, damn, nice. This time, next time you're gonna get wrecked if you don't follow the system. Trust me, it will happen. So your setup has to be preceded by a long-term trend flow that was, you know, selling off, selling off, selling off, selling off, reclaim, retest your point of interest here. Late for that, wait for it, retest, point of entry here. All while supporting the idea that short-term trend flow is in your favor, up. You have your dragon skin play, but that's a different strategy. So that's 4. Number 7. Number 7 is, number 5 is VVS. VVS over here is very important because it filters a lot of noise. And it can be a little tricky to read this, as you need to understand that it's not to filter out noise in the market of a highly volatile asset like Bitcoin, right? You need to actually be able to be a little bit more pragmatic here and take some action only when you see something that, okay, so what I'm trying to say is when you have a setup that, I can't really see any here, but in this zone, for example, there's a little bit. It's kind of like, I'll show you what I mean. It'll be changing colors. It'll be like blue, pale blue, bright blue, and then suddenly yellow, like over here. Suddenly yellow, and then suddenly blue. So that shows you an inconsistency for a starting MAG7 setup. Not the one in progress, but the one kind of just starting out. So, okay, so this one right here, right? If you look back, it's a little bit inconsistent. All right, it's not a smooth, for example, yellow, and then pale yellow, and then pale blue, and then bright blue, and you get a dot. The dot doesn't mean anything. It's the only way that we were able to find a close approximately how to alert. So if you right click on your MarketSpy, if you right click on any of the symbols on the flag, you can add an alert. And from the alert drop down menu, you can choose a lot of the symbols that are shown here, like the pod or the pyramid when it shows up. And you can trade those accordingly. But what's important to understand is that this blue dot is merely a representation of the alignment of these bars. When the top C bar and the bottom C bar line up, it shows you a potential continuation signal. Now, let me tell you something about the markets in general. When we have a bullish signal, right? It is very rare that you will find an immediate confirmation and continuation. Now, this blue signal is not necessary to have here, but if we did have one, unfortunately, we can't combine all these elements at a perfect one single candle because it just doesn't work that way. Algorithms that trade on frequency and at speed, they also have these things where we basically humans have to give it a green light by looking at the symbol. It's not like Renaissance technologies models, for example, are secretive and there's some secret sauce. Everyone knows what they are, but they need to have a human element where there's a guy that sits there and says, yeah, you know, the robot is not being stupid here, and I approve. So here's what happens on a lagging signal such as this, and all indicators are lagging signals for the majority of their functions. So what happens is that by the time you see one, the low are always here. You have to assume if my entry was not here, where is it? Where is this bar right now in relation to all this low to, okay, if you're here and you're like, okay, if it's gonna go up, I'm not gonna chase it. If it's not a perfect MAG7, I'm not gonna chase it. But if it goes up, where am I gonna get? Well, this ruler, this simple tool here, the ruler, will give you this blue line, this cross and the blue line. And you can go to your other tools and you can simply eyeball and go bang right there. Where this signal occurred, price will come back to exactly that median point right there. Take the stop losses, whatever, because people with a lot of your ATR could have been here. You could use a simple any Joe Schmo indicator, put it on here, and the ATR will give you a buy button at the bottom over here and say buy. What's it called? The super trend will tell you buy, and you buy, and you hold it because you think super trend. That means like maybe I bought the like a bottom or a continuation, and you don't exit based on the ATR values in the next few candles for consistency, for a happier life without super trend expectations. You hold, you place your stop loss here, and soon after price comes back exactly to where your point is, knocks you out, makes it look like it's going down. You're like, and your super trend will tell you short. Yeah, go take Market God or any of this. This will tell you long and short. And you short it because momentum looks like it's going down. Everything looks like it's going down. My super trend is telling me we're going down, and you short. Price reverses, and looking back, you realize here you were right about everything. You were right about the whole damn thing. You should have just held, but you didn't. But you know what? Next time you get in, get out here. Price dips, get in, get out here. Wait a little bit. Dips in equilibrium. Remember what these zones are. Just look back at the average ribbons and see where price likes to go and where statistically does it find those buyers. And if it reverses immediately, sell immediately. And then after 4 or 5, 6 trades, just don't trade. The hell out. Go take a walk. Go to your kitchen. Make a sandwich. Go take a walk somewhere, I don't know, in the park. If it's cold and it's COVID, play a game, watch some TV, dominoes, I don't know, whatever. And understand that I'll show you a chart where my trades... Why would I ignore it? I wouldn't ignore it. Did I say I ignored it? I didn't ignore it. No. The traders shorted here with another indicator. I'm just bringing examples. Johnny in the Sand. I'm just bringing examples here. You go long on this, okay? You're in EQ, you're possibly, let's mark this. I'll show you where you are. Let's mark this right here on this scary ass candle. Let's go to 15 and look at the dip over here. The trend flow is coming up. Oh, look, no diamond, perfect entry inside the baseline with a pyramid on top. See what I mean? On the 5-minute looks... And where's the price on the 15? Take your ruler and go from here to here and say it's actually in the middle where it's likely to reverse. If it's bullish, and the baseline will tell you yes, perhaps it's bullish. Maybe consider going long instead of short, because that'll most likely be the bottom. Isn't that the problem? Buy here and sell here. This is how you cure this problem. By having this understanding of where the potential buy or sell may occur and how you should be getting out. This line, this orange line right here, is, I would assume, your average entry. Either at the top here, in the middle of nowhere here, where you're like, oh, going down, oh, going up, oh, going out, safe. Same for me, same for everybody else. If you don't take your time to analyze, this is what's going to happen, and this is what happened to me. Except, I didn't have the baseline support when I was getting chopped up to death. Yeah. Here. What do you think? This looks perfect. All right? It's got all the elements, everything that we ever wanted, everything that we could have asked for. We have a reclaim, we have a retest, but look how crazy this thing is. That will mentally put you off a little bit, unless, and I was trying to size up over here. And average entry here, continuation. But yeah, basically you have to know that this is what it takes to trade these setups. So on the MAG7 on 15, your MAG7 is actually, well, it started here. Now look. You have your dot over here, right? Reclaim, boom, there's a MAG7 dot. And you're like, okay, all I have to do is for the diamond to disappear to go long. Doesn't matter where, here or here. But if you went long here at the top, it's actually a good trade. From here to here, these little wicks, you had a $500 move up every time, but also a $500 move down. So you would have been underwater a few times here, and it would have looked really, really scary. And unfortunately, you have to do something about that. So you cut this by, I don't know, like 80%, and exit when price moved by $20. As soon as you're in the green, lock it up with a stop loss. That stop loss, by the way, you're not going to lose a lot of money. It'll be quick and painless, I promise you. But and then if the first trade was bad, take a few days and not trade. Like, get your head straight and not trade. On a MAG7 setup, you have, sometimes things are absent, okay? So this is perfect. Baseline is here. Your first thing that you look at is your baseline. All right, retest here. Pyramid reversal there. MAG7 is starting to show all blue. I'm blue, dap, do, right? It's all blue. And then it just, you know, this is where you have to make a decision. Do you hold? Do you sell? That's your choice. When things look nasty like this, I stay the hell out of it. I don't trade it. Yes, it's got the retest, it's got the, but you know what? I spent like I said, 5 hours just looking at a single price point. I was on a 4-hour chart, and it's just it was right here. Like, you see this block, this candle, 1, 2, 3, 4, 5, 6, 7, 8. I was literally in the middle of here, entered a few times, got chewed out on these wicks, and I was like, I'm not doing this. Now on the 5-minute, there was a baseline reclaim here, and we continued. But on the 1 hour where I was, and this is my trigger chart. If yours was 15, congratulations, you made a good trade there in progress. I stuck to 1 hour so I can work on it, and I thought that it would give me more. See, I saw that this curving up. I didn't account that it might actually take its time, and it did. Right here, it took its time, and so that totally screwed me up. Now, from here to here, see, this kind of falls into the 46,200 territory over here, right? And this is probably a good entry, even though it's below the baseline. But look, it's been pumping since from here, right, on the delta, and it's been above for a long time. I don't know if it'll stop here. Would I go on a trade? Like, you can try on this orange line, get in on a trade, and it's gonna wick up. That's for sure. It's gonna wick up to at least half a candle that's going to be posted here. It's gonna wick up to the blue line over here, and you need to exit. That'll be a $400 pump instantly. It's going to put you in profit, and you need to market close it, or you need to simply exit that with a chaser or limit, however you do. But you can't sit there and be like, yeah, I got an entry. Now all I have to wait is for the next candle to continue moving up on this wick, and the next candle, and the next candle, and the next candle. That is not how trading is done. Trades are fast, just like the order book. Buy, sell, buy, sell, buy. You're not sitting there drinking pina colada, thinking about, you know, selling contracts, Bitcoin contracts, come and buy cheap contracts, bought at the low contracts. Everybody, you're not selling it like that. You know, it has to be like quick, right? You exchange hands and you're out. So you have to understand this, please. A MAG7 setup is not a guarantee. Which chart do you want me to look at? let's look at a very, look at these. Like, I see a lot of setups here that are profitable on these blue dots everywhere. But I'll also show you one that is nasty. That is super nasty, and I'll tell you how it's not on a MAG7, although many people may get fooled into thinking that it is. I present to you the blue dot, the beacon that stands at the top of this wick. How disgusting is that? If this whole time you thought that the blue dot was your friend. Remember the half a candle theory. Look at where the blue dot is. Range, half a candle. Look at where the wick is. Right here. Wouldn't that be a great entry? And it lands right on your volatility moving average over here. And it goes up instantly. And then next few candles does nothing, but you're in profit. You can sell and be like, I'm out. And then it does it again and goes up. And this time it really gives you a nice profit. It does it again and goes up. And now it gives you a real good trend. So these are the kind of things that we need to kind of keep in mind in terms of ATR. How much does price move on average where you're entering? And remember, the smaller the candle, the small candle, slow money, but it's there. Big, fast, aggressive candle, fast money, and the risk is also there accordingly. All right. Yeah, so what is this? Is this a MAG7 setup? You have to be able to look at this and tell me if it is. CPR zone, where is it? Where do we have a CPR zone? Right here. Do you see those lines? 1, 2, 3. If you go to your settings, you will see that's a weekly CPR over here. CP, center pivot range, bottom center, and TC, top center. It's resistance. Now, what else is here? Structurally, we are inside EQ3. Interested buyers here, sure. Price goes up, but only after this low, and all the way up here, $6,000 later, it shows you a continuation signal on a MAG7. And when we go down to verify this, we see that delta has been pumping from here, never having crossed the zero line before until now, when this thing is showing up. It's showing up here, and this looks like it's going up, but long-term trend flow is down. So elements are missing. There's strength, but it's relative strength. It's not bright like this. And then next one fails instantly. And actually posts a MAG7, a red MAG7, an actual legit MAG7, because we're kind of like starting together or mid progress in the trend. And this would have been an okay trade. Your entry where? Probably from here and exit literally 700 later on this candle. That's it. You're not entering here and here. You will never be able to. No one will. Not a machine, not a person. Machine may be better chances because they don't think, they act. When you see a setup like this, they act. They don't think. They don't, you know, if it goes lower. So, okay. Another thing about MAG7, entries, types of entries for a MAG7 setup. We have a MAG7, since we know that if it's a small MAG7, meaning, let's try to find like these, I don't know, like this one over here. It's a small MAG7 here, right? Relatively, not really. According to this, it's already made like half a move, so you don't have much space left. Okay, so let's just pretend that this is it. A small MAG7 as in it's a small candle, for example, right? Here, you are going to be scaling in using a simple method with Bybit Pro. Jeez, where's the... I lost it. There's my brush. Okay, so if it's like this and you're like, this is the low, signal is here, I can A, go long, thinking a continuation, check my delta. It's looking like it's tiring out. And if this is a MAG7, then what the hell is this? When we had a short-term trend flow crossover here, which is part of the requirements. PVS was here, bar confirmation was here. Is this a MAG7 setup suddenly when we're like at the end of this whole move here? On a reclaim, multiple retests, a solid retest, pump, and then it's telling you MAG7 is here, long it. Divergence. What can you do here without freaking out and saying that this is the top? Well, it actually is a continuation signal. So how about measure half of this candle from here to here or off the top? And how about you cast a ladder and scale from here all the way down to this range and say, look, there's a little bit of support there. And if we fall lower, I'll just cut my trade. So if that's the case, and I don't have a hard stop, I'm not going to put too many contracts here, but I'm going to put as many as I can so to get an average here. If you had done that, yeah, it pumps, you're instantly in profit. And now you can hold a little bit, having the same plan in your mind, thinking, if it does go down, I already have that plan, I'm cutting it. But if it goes up, yeah, I might hold it for a little while. How do you like them apples? So that's how you play the market, right? Based on these probabilities. And a MAG7 is not a hard sort of, these blue dots, forget about them. These are alertable, and thank goodness we have that, because it can just ping, 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 and tell us, look, that area there, there's something there. Bars are lining up. The stars are lining up. Literally the stars over here. They're lining up. And maybe we should change these to stars. And be like, when the stars line up. I'm kidding. Impulsive candle relative to others. Maybe enter at half of these candle. A half a candle would have been like this wick. And it also falls into your EQ1. Yeah, so when this develops, it's kind of like really obvious, and do your technical analysis, right? And if you're around and up at around that time, and you happen to be looking at the chart, take your time. These things, when they happen, it's a fake. It's a fake out. All right. The first setup that you see, the first signal that you see, it's a fake out. But if it happens, it's telling you like, look, there's strength waking up here. Now, a lot of these slow traders out there are going to get it eventually. They'll figure it out using their Fibonacci's or whatever. They'll look at it and say, I think it crossed over my 21 moving average. I'm going to go long, and they start piling up. And by that time, you will have your answer. So give it space and time and kind of like let it develop, you know, and get those entries in based on this. Now, if you don't have the time to sit and do that, market enemy type 1 for both shorts and longs. And that's probably the best thing you can do. If you can set it up and then walk away from it with a stop and then manage it on your phone, is the only way. Otherwise, it's a job. And you have to sit there and manage it and notice these inefficiencies and exploit them and say, okay, here we go. The order book, you see, orders are flashing. I have a signal. Everything makes sense. I'm going to go long here because, yeah, this doesn't fail. When we have a baseline reclaim, we have a retest and it doesn't fail. Now, let's consider, wait a minute. Let's consider we have a baseline reclaim here. Everything, look, 1, 2, 3, 4, and you're like, easy. Just going to go long and nothing to it. You skip this. Price starts falling. Prints a bullish pyramid. Not really. It's at the crossover here, and there's no real window, but it's here. And you're like, I'm going to go long on this baseline retest. And let's say your entry is here. So you go long and put your entry right here. And let's say this goes down and instantly picks you up and just sits there. And the next candle goes down, instantly picks you up. Now, from your entry, it's half a candle. Price is literally moving. Your entry is at a half a candle. And the other one is we'll have from your entry to this half a candle is $173 distance on a 12-minute chart. You need to be able to take the majority of your contracts out of this trade by this time, this distance. Because look, it's 366 because it's been moving aggressively. But here, it was probably about 160 or so. Maybe half that. And then as you're in this trade, you realize at that point that long-term trend flow, it's not like this retest, it was going up. But here your entry is like, now it's going down. So your logic tells you like, look, I better take profit right now. Or once it snaps back, instant profit, right? It snaps back. Just put a stop loss, go to your Bybit Pro, go to entry, and it'll automatically place a stop loss 0.5 ticks away from your entry, above price. And so if it doesn't work, screw it. Because when this retest happens, it's over. The diamonds don't give you a chance. If this happens, other traders don't get to buy anymore. That's it. This wick right here, you're part of it or none of it. And because of this, I myself end up skipping a lot of trades because I'm just not there at that moment. When there's an opening, when there's a window for the best handsome return worry-free trade, I'm just not able to participate because I'm not sitting there glued to my screen. Or if I am glued to my screen, that's even worse. I may be distracted. You have a couple of screens. You got like YouTube going on one. You've got some news articles going on the other. You got the order book there running. And you got the on-chain, Bitcoin inflows, this and that. You're giggling at Twitter idiots and all kinds of things, right? And then it happens. You're like, oh, snap. Right, and it's just like one of those days, you know, you're not really focused, you're not all there. So that is also part of the setup. But a MAG7 is not a strict one candle go long. I think what the problem is when it looks strong enough, it forces you to want to buy it. That's how markets screw us over. And when it looks like it's doing nothing, it's weak, it's extremely difficult to buy it without technical analysis. But once you have all these things aligned together, you kind of know. So perfect example would be, let's finally take a look at now look at this blue dot, right? Forget these blue dots. Look at what's the best way to scan for a MAG7. Bars, 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 bars. You're looking for bars when it's together. Screw it. Let's start here. Look, what's so odd about this? Mega candle, right? MAG7? Yes, absolutely. Long-term trend flow, down, 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 down. Green dot, green dot, green dot, diverging, going up, going up, going up. MAG7 setup, white, and it starts to curve up. Long-term, short-term, momentum wave, delta, lightning, RSI. All of your momentum indicators are pointing up. But the problem is, this candle was too impulsive, too aggressive. People will be punished who buy impulsive candles and not sell into them. What happens here is an impulsive candle happens. The smart traders, they start selling into it. It dumps. Where? What would have been a good entry here? Look, your ruler, the simple tool that no one uses except when they want to show off and say, look, my indicator would have made you go here and exit here. Look, the ruler tool will show you from here to here, price moved up 9% off this bottom. It's probably going to go drop half of that ATR value. And what's at half? It literally shows you a blue line here and shows you my baseline. My baseline. Can we retest it? Probably will. Is that how MarketSpy works? Yes. If it's an aggressive retest, I'm definitely buying. Yes. Pyramid, good. We're reversing. Candle reversal, sell at the first sign of resistance and leave the rest running. If it doesn't work, boom, you see yellow X, that's a short signal. Get out of it. Your 10% is closed. A little shakeout, turbulence here. Next setup, again, baseline reclaim. Blue dot. Is it the same candle as this one over here? No, it's a small little candle inside of this thing. So what are your options? You quickly scan the bars. Align. Yep. The bars are aligned. Very nice. When you see a complexity, like when you see a bunch of bars together, it doesn't have to be a dot, but they have to be close to each other. Bars, VVS, strong, early in the long-term trend flow development. Yeah, okay. So I'm gonna wait for what? Baseline retest. I'm waiting. What if it doesn't happen? What if it only goes into the blue EMA ribbon like CR said, and these candles just don't? What happens then? Well, maybe put a few contracts on there. Just a few. Enough so that you can cut them if price goes here, or average them out and build a better position at the baseline. But put a few contracts here and see if it's profitable and price goes up a little bit. Sell them, repeat, sell them, repeat. And then if you lose the baseline, it's a 12-minute. When price starts dropping and starts losing the baseline, and then you have the pyramid and reverses, and you're like, is it real or not? You go to 15. Well, it's 12, it's probably the same. Oh yeah, 15, there's EQ3 right there, and it's the first retest. You know, and the candles don't look as scary. It's just a small buy the dip situation here. These momentum waves that everyone is looking at, like, they have to work with other. That's why MSX is not a single piece, but it has like all these pieces in here that are important. Okay, so hopefully that's clear. 2 time frames. Keep one in your mind. When you see a scary setup, understand that on a higher time frame, we're probably doing okay and dipping just right into where I want to buy on the baseline retest. And we're done. And if you go to a 1 minute time frame, I don't know why. I know why. Impatience or lack of time. One of those two. Both are natural things, but where's the MAG7 off the floor? Not I'm not talking about here or here or here. I'm talking about when we had a little nice basket looking thing over here, right? Like a little boat in the water. Have a divergence, have a blue wave, and what else can we have in here? Well, let's take a look. Mad consolidation. Look, it's a baseline reclaim with 2 pyramids, but there's no MAG7 yet. It's just starting. Now the white shows up. We're already here. 1 minute time frame. If you had a small retest, you're not getting another one. It's just gonna continue. And you're at the early stages of this development here. So maybe remember, price needs to go back to the blue ribbon, and maybe that's your entry right over here. Or as price goes up, you can just keep scaled order open. So maybe many positions from down below, some of them get picked up, price goes up, sell. Recast the ladder. Some of them get picked up, goes up, sell. Recast the ladder. Some of them get picked up, recast the ladder. And so continue until it doesn't work anymore. Well, when does it actually work anymore? Here, when it starts to get a little crazy, maybe be careful. When it pumps up like this aggressively, remember, if you want to get in, half the value of the pump. Half the value of the pump. Where would that be? You can see here, instant profit. Rescale in. Maybe use this bottom part of the midline and the bottom of this as your market enemy type 1 box. Scale in. See what happens. Give it a try. I'm sure you'll come out looking rather happy if you understand. And remember, on a 1 minute chart, when you're trading on a 1 minute chart, you're out $10 or $5 later. Max. inside of a chop zone on a baseline reclaim. So when it's choppy like this, yeah, you better get in and you better get out $10 later. You have a retest, baseline reclaim, retest. Look, GPS setting up on a VVS. C bars over here. Long-term trend flow going up. Short-term trend flow going up, obviously together with the baseline. There's no valid short-term without the green baseline. You need to have nice, vivid-looking green baseline. It goes up. What about here? Baseline reclaim, and you're like, I'm gonna go up. You have your two white widow X's over here below the market structure, and a rather weak candle that doesn't follow through. And look, this is looking like it's going to snap back, just like this one here. But there's something else that's happening here. You don't have the bars. The C bars are completely void at the bottom. This is noise. This is noise. There's no confirmation bars. This is noise. Here, they're healthy and filled with pure blocks of solidness. It's a solid trade, most likely, on the probability. Here's another one. Blue, continuation. Just dipped. Yeah, it's likely to continue, not reverse, because where is it going to reverse to? To what? There's too much flow here to reverse to. So you're accounting for these probabilities and you're saying to yourself, yeah, it's most likely. So 1 minute, you see, we have many examples here. And then you have your equilibrium zones explained in other videos. You already know how those things work. And that is your core setup for MAG7. Nothing too complicated. It's just you need to have some time to sit down and look. And please don't be frustrated if things don't work. I know at first it might not really make any sense. But because for an impulsive candle, you will not be used to, like, you're like, what do you mean half a candle theory? The kind of nonsense is that? But I'm telling you, listen or continue with the old habits and you will not make it. Look, be happy when you see an impulsive candle, assess your probabilities, put that trade in, small number of contracts if you're not sure, see how it works out.